could be anything in the world, but I can never be you because I stand tall like I'm on my tiptoes, baby. You think.
Good morning, everybody. Today we got Daniela Cambone on the show. So excited to have her. She's been crushing it on Kitco and Stansberry for years. Really excited to hear her thoughts on stuff. Always watching her do the interviews. Thought it would be fun to get her thoughts on all the topic matters she usually asks questions to people about. So really excited about that. Later on in the show, we're going to get into some of the Canadian micro and junior news that we always cover. I got Jay joining me today as the co-host. So buckle up. Let's get started.
Don't mess up the mood. Yeah. I was
Daniela, thanks so much for joining us today.
This is so much fun. Thank you for having me.
I don't know if the intro threw you off at all. We keep trying to get better at it, but I'm still kind of scrambling because right now I'm doing all the control stuff, and it's just that's why you see me looking at all these different screens.
I love it. I was like, let's go. It got me like pumped, you know.
Okay. well, we're super excited to have you on here. Let me just switch the screens around. I've been watching you for I want to say 10 years on Kitco and Stansberry. Is that how long you've been doing it?
Yeah, I hope I haven't bored you yet.
No, it's especially when all the COVID stuff started, and we really saw. It was unprecedented, right? Like we've expanded the money supply 25% in 1 year. The Fed's creating all these different acronyms, and it's hard to remember what they're doing. And then here we, Jay and I were like, okay, well, like I suppose that we're gonna have to go get like real jobs or something. And then the year just goes crazy, and stocks run.
Yeah, well, congrats on the success of your show, by the way. And, what a time to be doing digital and video and live content. I mean, I'm sure you guys noticed it as well. With the pandemic, at least I've noticed a shift in people's need and desire for financial information outside of mainstream media. So we totally saw our content blow up.
Yeah. And for us, I mean, we started out as we're sort of bottom up stock pickers. We like to look at balance sheets, cash flow statements, accounting notes, that kind of fun stuff. And then we said, okay, well, let's try to focus a little bit more on the macro here, at least in the near term, because this is so important in terms of how equity markets are going to play out. So then we started trying to do interviews with a lot of these macro guys. And then we're just chatting in staff meetings aside. We're like, how does Daniela do it? She just has these natural conversations with all these people where whenever we ask questions, the only answer we ever get is, yeah, the Fed's printing a lot of money and hyperinflation.
I appreciate that. I really appreciate that. Thank you. Thank you.
You do it and it's so natural, and you have a conversation, and now you've got a big debate coming up with Michael Saylor and Frank Giustra. Is there anything you can tell us about that?
Yeah, I mean, I'll tell you the backstory because it's actually kind of caught me by surprise, and it's kind of funny, and not. But so Frank Giustra, who I've known, for close to 10 years now, and I've interviewed him multiple times, calls me up and is like, look, I want to debate Michael Saylor. And I was like, Frank, are you serious about this? And he's like, I want to debate Michael Saylor. He's like, I don't want to hear him bash gold anymore. And I have really good counterpoints. And I want to, really have a discussion with him. So I had pitched it to Michael Saylor like a month ago saying, look, I have a really, reputable gold person. I mean, he's a legend in the gold community. Who wants to challenge you and have an open and discussion, not like a discussion where everyone's like talking over each other, but true like intellectual talk of determining the ultimate asset that will stand the test of time, like the apex asset. Is it Bitcoin or is it gold? And by the way, Frank Giustra is, full disclosure, he'll say he owns both. Of course, his preference is on gold, but he's going in there thinking, or with an open mind, saying, you know what, change my mind, Michael. Let me see what you're seeing, because he doesn't see it yet. He sees Bitcoin as that speculative asset, where Michael Saylor sees it as the the end of all solutions and wealth preservation. So we are just finalizing a date. I wish I could tell you the date. I can hint that I believe it will be around April 21st-ish, but I literally just got out of a meeting where, we put out some dates, and I'm going to throw them to Michael and to Frank. Okay. And we'll be announcing it shortly, but it's going to be awesome. Awesome. I already have all these ideas in my head. I've already started my research, and I'm just going to go into like hibernation mode for like the next week to prepare for this.
So
a battle.
What is your take on Bitcoin? Our staff did some research. It sounded like you're relatively bullish on it.
I am, and I'm happy you're asking me that, because in my former life or prior life, I'm the founding member of Kitco News, which is a site that's dedicated to gold, and that's really how I built my name. So a lot of people saw me coming, from the gold world. But since joining Stansberry, I've really been fortunate to expand my horizons, and I've had a lot of, I've had the biggest crypto voices on the show, Max Kaiser, Michael Saylor, Pomp, or, now a convert, Kevin O'Leary. So they, through those interviews, it's also opened my mind, because I was introduced to Bitcoin at $3, and I didn't bite because I didn't get it back then. And that's why I respect such, people like Max Kaiser, who are visionaries, who saw it even 10 years ago. Like, I wasn't there yet. I was like, what? Like, what is this? Like, I don't have time for this. So I've definitely come a long way, and I have Bitcoin in my portfolio along with gold. I definitely see a place for both. I just, right now, they play different roles for me, and we can talk about that. But no, I am very bullish Bitcoin. I've gone on the record saying I would not be surprised at all if Bitcoin rallies to $100,000 this year.
So are you biased then in your moderation of this event? Which do you prefer more?
I that's why I said this is my mission, because I've come from the gold world, but I have thoroughly embraced crypto, and I have no bias. I am going in with an open mind. That's my job as a journalist, and definitely as a moderator. So I'm going in open-minded. I see value in both. I totally see both sides of the story, and my job is to moderate it and create the best debate and event for all the viewers out there. So no bias at all.
So here's a question I like to sometimes ask when we've got some of the macro gold bugs on the show is, let's say that I have access to a DeLorean that lets me travel in time, similar to that of Marty McFly, and in January of 2020, I show up in my DeLorean and I say, Daniela, there's going to be this virus. It's basically, we're just going to tell people to sit on their couches while we mail them checks. We're going to expand the monetary supply by over 25% in 1 year and create more debt than we did during World War II. Now, you go back and you try to think about how you're going to structure your portfolio. How bullish would you be on gold, and what price do you think that gold would have been at today, given that information?
That is an excellent question. I would have said, I don't know what you're smoking, and I would have definitely thought gold would have been much higher, because talk about the Black Swans events. And yes, gold did make a nominal high during this event. But my counter argument to that is, well, 2000, and change is still pales very much in comparison to the highs that Bitcoin has made, right? So I think the question would have also had to been, if Bitcoin were not part of the equation, I think gold could have easily been, north of 4,000, 5,000.
You think Bitcoin pulled that much money from the gold market?
Absolutely. Yep.
Wow.
Absolutely.
The common response we get from the gold bugs is it's the equities that are that are hurting the gold market, not necessarily Bitcoin. But I tend to agree with you, because from my view, what ultimately drives gold is sentiment, and Bitcoin has hurt the sentiment of gold. Would you agree with that?
Yeah, and I think it speaks to a similar audience and crowd of gold. So yes, I agree that equities also took a piece of that puzzle, but the people who were in equities were also the people that owned gold. Now, when people were reassessing their portfolio, they were like, okay, I'll keep my equities, but like guys like Jim Cramer, right, who are like, but you know what? I'm going to have my gold holdings, and with the rest, I'm going to put it in Bitcoin. I think that's what a lot of people did. I absolutely think Bitcoin has taken a market share away from gold.
So here's a question that I like asking people like yourself. What when you wake up in the morning and you're looking for your information, what media do you go to? Because obviously you've got, you know, some pretty big people coming on your show. You're trying to prepare, make sure that you got relevant questions for the day. What is your sort of blog tour or media tour look like in the morning when you sit down and you have your cup of coffee?
Yeah, the more underground, the better. Everything really, but honestly, the biggest source of information are the people. So I read all the emails I get. I ignore a lot of the comments, but a lot of the comments I get, and there's nuggets hidden in there. People will email me all the time. You should check out this guy. You should check. So I really do a lot of my homework on the weekends. And I mean, I try and leave no stone unturned. I look, you know, I'm still on CNBC, you know, I'm still on Bloomberg, I'm still on the traditional media outlets, but I like a lot of the non-traditional content out there, like a Palisades Radio or, you know, your show, or so, you know, or the Cambridge House interviews that Jay's doing. Like, I'll just look and hear what people are saying. And especially when I have a guest on, I'll look to past interviews they've done. And I'll even go back like 3-4 years and see how their views have changed. So, you know, as you guys know, there's a lot of work that goes behind an interview. It's not just like, oh, I'm going to have Doug Casey on today. Right.
Mm-hmm.
So people don't see, I mean, unless you're in it, like you guys get it, you don't know the work and the background info that goes behind each interview. It's a labor of love, you know. So.
It's hard, and like I said, our whole staff watches your interviews, and very much the mindset of that you're kind of like the Wayne Gretzky.
Thank you, I appreciate that. But yeah, the other thing I do is, like, I obviously read what the person I have on. I really want to study them, learn them, but I also try and get like their personal history or experience, or try and get like a personal element is my goal. If I can do that in every interview, then I've succeeded.
Do you ever find, if you've got, like, let's say you got Doug Casey on and he starts talking about how the world might break into civil war or something to that effect. Now you've done your research, you've got all your questions ready to go, but Doug decides he's going to go down that rabbit hole or that path. Do you kind of just throw away your questions at that point?
Oh yeah. Yeah. But that's why I love journalism, right? Because like, you have to know how to pivot, right? You have to be able to think on your feet. Like, there's so many times I have a script and I'm like, these are great questions. And it's like, it's out the window because they've gone a different path. And then I can't stay on my script because then it looks like I'm not listening to them at all. So yes, I'm like, it's there and they're my footnotes. But if I feel like the person I'm interviewing is going down another path, I'll follow them unless they're going on a rant. Then, you know, I'll try and rein them in. But if I feel it's going somewhere good that I didn't expect, I let it run.
Okay, interesting. So
like Max Kaiser. It's like, I don't even know why I write questions for Max Kaiser anymore.
I remember when he was talking about Bitcoin, like, you know, 8 years ago on Russia TV. I was like, this guy's insane.
Yeah.
He's just shilling his Bitcoin. He's never going to be right. And Bitcoin was trading probably at that time like under $2,000.
Right. And now look at him living his best life. Reminding me every day.
Oh, geez. So something I like to ask is, obviously with all this money printing that has gone on, we got the economy. It's starting to move back to normal-ish. Presumably velocity is going to pick up. We've got, you know, seen on Twitter people who work in contracting talking about how lumber prices are up 300%, or General Mills, I think last week, put out earnings and they kind of said, look, we're probably going to see some hot inflation, mid single digit inflation, that coming from a big CPG company. Now the Fed, they're obviously talking about how we're probably looking at transitory inflation, meaning it's going to be hot for a little bit and then it's going to go back to normal. What's your take on it? Do you think that we're going to see sustained levels of inflation? Do you think that the Fed's going to intervene? How do you think about everything that's happening and how the Fed's going to react?
No, I think about that every day, and that's a fantastic question. I live in New York City, so I feel that it's maybe a little different here, but I already feel inflation super hot in pockets, in certain pockets. For example, just grocery shopping, and I bring this up, like not even at Trader Joe's, that was my go-to, that's where I was like, I could get my bang for my buck. The other day I went and I was like, wait, what? How am I at Trader Joe's or Whole Foods, So I definitely think inflation's already here. Now in the housing sector, and again, I'm in New York City, so it's a little different. I bring up the fact of what I used to pay in rent for, a 1-bedroom. Today, I could get a 3-bedroom, 2-bath. So just to put things into perspective, how expensive rents are here in New York City, but they've come crashing. And when I take a walk around the neighborhood, it's just like for rent, stores closed. It's just, we talk about this economic recovery. It's definitely not here yet. So it's like, yeah, great. We have robust job numbers. Of course, that's going to happen after you've been closed for, months and months and months. But is it real? I don't know. Small businesses, mid-sized businesses, I don't know if they ever recover.
Do you think that work from home is here to stay?
Yes.
Yeah.
I would say for companies who've realized that they can. I don't think people are going to want to. Why would I want to commute 2 hours to go sit next to someone in a cubicle that I don't speak to anyways? So to then have to commute another 2 hours to go home. I think a lot of people, and not just companies, are going to be like, I don't want to do that anymore. Like if we think about it, like why were we doing that? Like,
it's so unproductive.
Yeah,
I think the biggest issue will be onboarding new employees. It's fine when you've been doing a job for 5 years and you know the ins and outs of everything, but training is a whole different beast in my mind.
And once you get, I'll tell you guys a story. This is when I was at Kitco, and that was a really family atmosphere at the time when I was heading the department. And when I moved to New York, and all of a sudden I was working, out of my apartment, but filming from Jim Cramer's studio, it really hit me. So I almost felt like I was in preparation for pandemic mode for like 7 years, because it was really hard for me to, always be with my team, and we were a great team, and then all of a sudden be alone. But I had got used to that. And once you get used to it, you kind of get over the office setting and you're like, nah, I'm over it. Team building exercises are fun and all, but we could do it virtually, and I could see you guys for, beer one on Friday or something. But I definitely think that, and again, in New York City, like Wall Street, like there's so much occupancy. Like, I don't think they're ever going to fill those office spaces again, because people have just realized, hey, we can be productive and do this from home.
With Stansberry,
yeah,
are you able to branch out a little bit more outside of gold?
Yeah, totally. And that's why when people are like, why'd you leave Kitco, and they thought there was like all this drama, I'm like, no, it's like I was there 12 years. It's like it was okay I felt ready to move on, and that was a big part of the reason why I accepted to go to Stansberry, is that they cover all aspects of financial journalism and allow me to branch out, and that's where I kind of really made a name for myself in the crypto community. So I feel like had I still been at Kitco, I wouldn't have been able to bring on like the Michael Saylors and whatnot. So that's been awesome for me. And of course, like a lot of my content was still heavily focused on gold and the mining space, because that's my audience, right? So they followed me to Stansberry. I see it in the traffic and the numbers, and I'm very thankful. Stansberry's thankful. But I've definitely branched out, and we will be branching out a lot more. So definitely.
Now, one of the things that we kind of noticed with a lot of the gold investors from, say, early 2000s to early 2010s here in Canada anyways, is we saw a lot of the investors flock into cannabis. And we've noticed that some people in the gold community, when we asked them to come on our show, they were kind of like, "Oh, you guys cover cannabis. We don't want to go near that." And we just saw like a bunch of executives from sort of that gold space transfer into that arena. Is that something that you watched at the time and was like, there's a lot of money being made here? Because I'm sure you knew a bunch of people in your network that were in shells that got turned into the canopy growths of the world. Was that something that you were watching and going, okay, maybe I should participate in this? Or
yeah, no, that's a really good point. And I mean, I was at Kitco at the time when the cannabis story was becoming hot, and there was a fear of covering it, of what will that do to our brand, and it's all. But now it's so mainstream, it's kind of like how people have embraced Bitcoin. Like look at banks now, like, yeah, but no one wanted to touch Bitcoin before. It's like, you can't, no, Bitcoin's for drug dealers. And now like Goldman Sachs is in it, so, and cannabis is so like whatever now. Like now the new thing is like, I had this company on that does like psychedelics, like selling mushrooms now, and they're gonna, it's like, wait, what is happening? It's like,
if you've got Kevin O'Leary studying acid, right?
Exactly. Thank you. So you follow the MindMed story. So when I had him on, I'm like, oh my God, this makes cannabis look like nothing, like just telling me to take mushrooms basically to cure like anxiety or my backache. So yeah, I think at the time there was a fear to cover cannabis, but now it's so normal, so normal.
Now I know you don't give investment advice, so this question isn't intended to go there, but clearly you do look at mining companies. And a story I like to talk about sometimes is Jay and we got burned actually on a Filipino gold deal where where like we saw this deck and they were talking about these big swarming veins, and we're like, okay, there's no way that they can't hit something with a basic drill program. And then we waited 4 months, and the PP didn't close that we'd written a check into, and then 4 months later it closed, and we were expecting drill results. They didn't come. Another 4 months later, oh, they're coming soon, and then another 2 months later they come, and it's just a whole bunch of dusters. So I'm curious, when you are looking at mining companies, what are the high level things that you tend to think about when just to say, okay, maybe I'm interested in this, maybe not?
No, I chuckle because I feel like we've all been approached at those conferences by someone who's like, hey, I got three company tickers for you. You got to check out, yeah. So, and I know guests have said this on my show, but it's totally the truth. You have to look at the management of the company.
Yeah.
But I think that's really what it comes down to.
Yeah. And for us, I feel like we had to get burned a few times to learn our lesson.
Yeah. So I would really look at, for me, the top thing is, who's the CEO and who are the people surrounding him.
Okay. So
yeah.
Last question for you here. It sounds like you're looking at other areas. What other areas besides gold and crypto interest you right now?
Gosh, everything. I wish I could just branch out completely of finance. That's kind of why I got into journalism. Like, I just have a curious mind, and I'm just interested in such, just everything, like I feel like I could talk to anyone about anything. That's what I love. I feel like everyone has a story to tell. You just have to be able to get it out of them. But I guess like in finance, nothing really, crazy. Just covering more equities, more just general monetary policy. But I like covering, I like having guys on, like, I don't know if you guys have had Willem Middelkoop on.
No.
It's kind of like no Oracle of Amsterdam, but
okay.
He's fascinating because he like analyzes like IMF reports and finds like hidden stuff in there, and like, talks about like a new layer of money being unleashed and why you need to be getting out of the banking system. So exploring like alternatives to like traditional banking is something that's really interesting to me now, and what our audience loves. Mm-hmm. So I think I'm going to be doing more of that,
Mm-hmm. Yeah, that's okay. I got one more question I want to sneak in.
Sure.
Is there anybody that you haven't interviewed yet, or when you're browsing through YouTube trying to find content that you want to consume on your own personal time, that you're like, okay, there's something fresh with this person, I've got to watch this. And perhaps you don't want to say the name, but
no, I was like, can Bono be on the list or? Okay. Actually, I just had him on. So it was. So there were two people that were on my bucket list, and one was Mark Cuban, and it took me 2 years to get that interview. So just if you have a plan, stick to it. Because I remember the first time I wrote to him, and he wrote back. He actually wrote back. I said, Mark, would you come on the show? And he just wrote in caps, no. And it came through the printer. And I was like, oh my God, Mark Cuban wrote back. So I took it and I saw it as a positive. And I was like, at least he wrote back, at least he acknowledged. But 2 years later, I finally got him on the show. And he was awesome. He was like one of the coolest people I've ever met. And he was like, I was like, how long do I have with you? Like 5 minutes, 6 minutes. He's like, oh, take the time you want. If you want an hour or two, like whatever you want. And then I told him, I said, I've been trying to nail this interview for 2 years now. So we laughed about it. And the other person I had wanted to interview, being in the mining and the gold space for as long as I had been, was Robert Friedland, who hates the press of Ivanhoe Mines. And he finally just came on like after a decade. So he was someone I wanted to interview. But I mean, I'd love to have Elon Musk on. So Elon, if you're watching.
Jay's one of those nerdy Tesla short people who's trying to hide back his I mean, I'd love to have Ray Dalio on, Jeffrey Goonlock, like some of these guys on. I'd love to have them on, and I have approached them, and hopefully one day they'll come on the show. Well, Daniela, thanks so much for coming on. This was a big thrill for us to get to chat with you. And
no, you guys are awesome.
Your content is fantastic. It's something that when after I put my kids to bed at night and I grab a glass of wine and I sit and I look for content, I don't turn to Netflix. I find myself on YouTube watching your content. Awesome. I really enjoy it.
That's really kind of you. I appreciate it. Thank you so much for the support. This was a lot of fun, guys. I loved it.
Well, thanks. And hopefully you'll come back on in the future.
Totally. Absolutely. Thank you.
Thank you so much.
Thanks.
Okay. So Jay, what do we want to cover next?
Well, you're the host. I'm just a co-host. So I'll let you pilot this show.
Well, it's called SmallCapSteve Live, but
exactly. You're the pilot, man.
Okay.
Sometimes I just like to sit back and listen. I'm sure viewers have caught on. I'm sure you've caught on to that too.
Yeah. So we got Noelle Rubini in the news this morning. Shall we cover that? Oops, hold on a second here. This is the wrong thing. I can tell you in a second. Actually, Gage is public. You got a story on. Let's start with that. Gage.
Yeah. So they didn't actually put out a news release this morning, which was kind of odd. And because of that, I'll be honest, I forgot about it. I thought of it at 5 a.m. this morning. I missed it after that.
We're coming live at 2 p.m. With Fabian, the CEO of Gage, Fabian Monaco. Okay, so here we got Noelle Rubini talking about we're seeing widespread frothiness, bubbles, risk taking, and leverage, warns Dr. Doom on the state of the stock market. So, Mr. Dr. Doom here. This is from Market Watch. I'm sure that you love me sharing content from other websites other than the deep dive.
Hey, we can't cover it all. We're working on getting more writers so that we can, but right now it's like a 3-4 man show, and you can only cover so much.
So we're seeing widespread frothiness, bubbles, risk-taking, and leverage. Lots of players have taken too much leverage and too much risk, and some of them are going to blow up. I would assume
this deep insight comes after Huang or whatever his name was blew up. So deep insights here.
Certainly, and I'll also note that my ads do not have yoga pants today. It's Little Caesars free crazy bread.
I know. I was looking at that. It made me hungry right away.
I'm ready to go to Little Caesars after this. In between, during my break. So what I found kind of interesting when I read this article, though, rising. So this is talking about the 10-year, and he believes that we could see the 10-year spike above 200 basis points, which would be somewhat troubling. And he explains why. Which I like this. Rising yields have propelled investors to sell more speculative wagers because higher yields imply that borrowing costs are also climbing for investors, making such speculative wagers less economically attractive. And I find that very interesting, Jay, because we hear about what happened with our Chagos, right? Where you got this guy, and again, I was talking about this yesterday. Nobody really gets into the fact that none of us really understand what happened here, right? Like, we know that there was a guy, he got crap back in the day, like 2012 or something like that, for insider trading. He then had some money left. He put a bunch of it down on Netflix and Amazon, and then he went around to all these different prime brokers, aka the Morgan Stanleys, Numeras, the Goldman Sachses, etc., Credit Suisses, and he somehow managed to put equity into each one and continue to leverage up as the share prices rose. Now, he did this through what are called total return swaps, which presumably have some sort of variable rate that is then tied to, because interest rates are all kind of tied to each other in some shape or form. I would presume that the 10-year yield going above 200 basis points could have been very painful for him. Goldman Sachs and Morgan Stanley and Credit Suisse weren't doing these deals with him because they were making tiny amounts of money. I would presume that it would be very damaging for him if rates rose too much, and it could have resulted in a larger or a quicker trigger on that margin call, which begs the question. And of course, every talking head out there wants to tell us that there's more Bill Wongs out there or Chagos out there. These companies that are using total return swaps to purchase equities and driving the market higher. And I suppose if we see the 10-year go above 200, we just might find that out.
So I just sent you a tweet, actually. If you don't mind, pull it up. I found this actually as a result of Edwin Dorsey's The Bear Cave newsletter, which comes out every couple of days. I actually highly recommend it. I've never talked to the guy before. It's just great content. Anyways, he highlights this tweet. Better question. If you're looking at the history of the guy, how does a highly leveraged fund survive March 2020 and blow up in March 2021? And I think that's perhaps the best question I've seen anyone ask on this entire thing.
I can't wrap my head around a guy's net worth going from 200 million to 20 billion in 8 years. See, everybody's
you missed to zero in 8 years. 200 million to 20 billion to zero.
Yeah, so he 100 times. He 100x'd his. But the thing is, how much do we really know, right? Like, there's certainly not that much in the news media, and I've been consuming as much as I can. So we're still kind of trying to figure out exactly what happened. And
and the reality is there's probably 5 people on this planet that know exactly what happened. And actually, maybe not even that, because you know what? Goldman Sachs doesn't know what happened over at Credit Suisse implicitly or at any of the other banks he dealt with. Bill's probably the only one that actually knows what really happened. But I have such a hard time believing that the sell-off from Viacom CBS, when they announced that they're effectively raising $3 billion between secondary and primary offerings, is what sent this guy to blow up a $20 billion fund. Sure, there's leverage and everything else, but that just seems a little bit far-fetched when you look at things. Sure, we saw things happen, but I don't think it's actually happening exactly the way we were told, or at least the way that was explained to us.
So let's continue here with some of the Canadian microcap news. Here's a company, neither of us are long, not a client or anything, but it seemed like a relatively big TSX IPO. We said, okay, let's try to put some coverage on this. Payfair, they see overallotment bringing their IPO transaction to $75.2 million. What can you tell us here, Jason?
So Payfair, March 16, 2021 is when they originally went public. At the time, they had raised $65 million, I believe it was. Somewhere around there, 65 and change. Shares were purchased at $6 a share. In the time since, they have now closed over allotment. Why? Because, well, if I can get shares at $6 while it's trading at $6.28 on the TSX, what are you going to do? So yeah, they closed their over allotment today, bringing the total IPO transaction to $75.2 million. Payfair, for those of you that do not know, They provide digital banking and instant payment options for the gig workforce. So right now they're actually partnered with the likes of DoorDash, Uber, Uber Eats, Lyft, and a number of different related services. So it's an interesting name. Again, you see these big IPOs and you see no mention on Twitter whatsoever of them, right? It kind of says that we kind of live in a vacuum on our social media that isn't always representative of the larger markets.
Mm-hmm. Okay, moving on here. TrueLeaf. They look to raise funds in the U.S. following the filing of their S1. Jason, this sounds like a best-in-class cannabis operator in the U.S., and they announced that, or not announced, they just filed an S1, which is what the SEC. What can you tell us about this?
So they actually did announce it last night, in the sense that they're looking to raise a number or sell a number of shares. I believe offhand is 4.4 million shares. They're subordinate shares with no warrant that they're looking to sell. They say in the U.S. and Canada, but let's face it, it's going to be bought all up in the U.S. because it's the first time that they'll be available to be purchased there. No pricing was included yet with the offering. I'm willing to bet they're trying to push it as high as they can. This thing was at $56 Canadian yesterday. So, I mean, 4.4 million shares is a lot of money that they'll be able to raise, at least Canadian dollars, right?
What's it trading at? $60 a share, $70 a share? 55. So if they're doing 4 million shares, that should bring them in, I don't know, what, $23 million?
What? 22 million at $54 a share and 4 million shares.
Oh, sorry, you thought 200 million. Yeah. Okay. Look, man, you know what's been happening in my house? We make a pot of coffee every day, and my wife's been drinking a lot more coffee, and it's screwing me up because I just keep making all these errors. So I'm blaming my wife for this one.
Drink all the coffee on you.
Oh, I'm just not getting my normal. But then, what ends up happening is I end up going to Tim Hortons in the middle of the day and grabbing a cup of Joe. Then I end up drinking too much, and then I
you get
yeah, it's
and then you vape at night to slow yourself down, and it just builds.
Yeah, it's becoming a problem. So look, that's a substantial amount of money.
You know what? I just love that I got to correct SmallCapSteve on a math error that he made. The former math teacher made a math error, and I finally get to catch it after 3 years of working together.
Yeah. Well, what else? There's got to be stuff in the news this morning that you want to talk about that you found particularly interesting, because there's so many things that I could bring up talking about here, but I don't.
Well, you know there is, but here's part of the issue. I cover a lot of news in the morning, every morning, and while stuff is interesting, sometimes it's interesting. But because it's such a small name, it's not worth mentioning on the show as well, because we try to take a bit more of a macro or larger cap perspective on the show. One example, Hillcrest this morning. Hillcrest Petroleum. You've probably never heard of them. They've got a bit of a following on the CEO.ca board, so I covered them. This morning, they announced something that just made me laugh, and I had to cover it. They announced that they're acquiring a company that has electric machine control software IP. I know the title of the story is terrible, but that's because I pulled it directly from what they said they're acquiring. It's something like Anigo Technologies. So they acquired it for 6 million shares of Hillcrest, which was about $1.35 equivalent plus $200,000 cash. This news release was egregious in the sense that all it did was focus on buzzwords. The firm currently is focused on software that's been designed to be used with electric motors, generators, and other integrated power systems. And then they list the actual applications, aeronautical applications, autonomous vehicles, controls for renewably generated power, because apparently the renewable portion makes a huge difference. Traction control systems to extend electric vehicle range, control software enhancements for use with items such as blockchain and Internet of Things devices. So, bottom line, people were getting excited on the board and all this. Do you really think a company would be able to acquire amazing tech for $200,000 in cash and 6 million shares of some obscure issuer that's really going to change EVs and what someone like General Motors is using in their software.
Do you ever have days where following all these micro caps and small cap stocks feel like, what am I like you're just like betting on a bunch of like drunken sailors, like try to operate a heavy machinery, like there's I sometimes get that feeling, and it's a
I do, and it truth be told, it exhausts me mentally. I know how that sounds, like, oh, you're exhausted mentally because of the garbage that's out there. Yes, because it's exhausting to see people put their money into things like this when there's good names out there, but yet you got someone like this. They pay 6 million shares of an obscure issuer and $200,000 in cash, and they're telling investors that they're going to change how blockchain works with this tech. Well, software IP is not going to be used for blockchain. Extend EV range. You're just going to call up Hyundai or Toyota and go, hey, I got this great tech. And they're going to go, yeah, you and the 5,000 people in the line beside you, right? Or aeronautical applications. How are you going to get into that? You need a path. You need people experienced in these fields that have the network to go to. And just acquiring some random company with one guy who's now your chief technology officer is not the way to do it. I get that things get built in steps. I understand that, and you have to start somewhere. But investors in the current environment don't seem to actually understand the reality of things and how long-term a lot of this stuff is and how difficult it is to make a name in a space like electric vehicles, right? Like, it's just exhausting.
Mm-hmm. Yeah, I agree, man. There are days where I look at this stuff and I just go, well, what are we investing in? What are we following? One of the things I like when I look at a company and and I think it's just one of my rules now moving forward when I invest in microcap or small cap stocks, is I need to see a full team of people that wake up every morning and they just focus and work on that business. And that makes me feel a lot better. Investing in the Canadian small cap and junior markets, where so many of these companies are literally just ideas with a bunch of consultants who agree to like take on a C-level title, and then you ultimately look at the company and you go, okay, this thing doesn't work. And then on the flip side, we do have companies where there are people, the company doesn't make money, and they went to those private equity markets and they tried to raise money, and no reasonable person would write a check because they looked at the cash flow statement and said, well, you guys don't make any money. And we don't see any path to you making money. So what do? You go public and you start telling this big story of how, oh, we just need to raise a little bit more cash, or this one little pivot, this one little catalyst away from everything opening up. Then you're going to see our operating leverage. You're going to see how much money we're going to be making, and it's going to be magical. But if they couldn't make money in the first place, and it's a scalable business, what's really going to change? And that's something that I find myself asking myself regularly. And then look, perhaps we're just a little bit exhausted because we were in a very frothy market, and we've seen sort of the froth start to melt down a little bit. And it's kind of like now, like we're looking at all these different operator, if you want to call them operators, that have certain valuations. And it's kind of like, okay, how do we cover this or write about this in good faith?
Yeah, absolutely. I mean, I want to make one thing clear. The space is full of dreamers, and you have to be a dreamer to a certain extent to believe that there's a path forward for these companies. I get that. And I mean, there's a number of names out there that I'm just quietly buying. Am I going to name them now? Probably not, because I've been waiting on them for weeks to come down, and I want to buy more. But so there are good companies out there. It's just that the ratio of real to fake is so high, it is getting ridiculous, right? Like, there's two companies out there right now that I've been eyeing up for the last 3 weeks, and it's not at my target price yet. It'll get there. And it's like you said, I know that every day there's someone that's going to, maybe not to an office, but they're sitting down at their desk to work on that company and actually build the company. Not so much the equity. The equity when the equity is an afterthought to a certain extent, that's when I find it the most interesting, because it means that the business has got to a point where the equity now has to catch up, rather than the business catching up to the equity.
And that is so frustrating. And one of the worst things is that there's a lot of these people who build up these Twitter personalities, and I'm going to mention names, where they know what they're trying to do is they're trying to help get people to buy the stock so that they can hold the valuation and hold the share price where it needs to be. And then they'll try to go backfill it with a bunch of M&A. And if you are an investor buying there, your best case scenario is that you don't lose money. Right? Like maybe it goes up a little bit, you scalp it, you trade it. But in the end, if you're looking at something that's terribly overvalued, where the path forward is M&A to try to make the valuation make any sense, it's frustrating and it's disappointing for me as somebody who follows these things, because I find myself just sort of like, I see through it. We were talking about one CEO yesterday of a psychedelic company. I'm not going to name which company, but we had an investor call with him last summer, and he got on the call and he talked about how his, family member tried to commit suicide and how he decided he was going to devote his life to mental health and fixing mental health. So it's all great. But what he didn't mention was the fact that he had like paper that he paid a penny for, and he was trying to sell this paper for, 70, 80 cents. So it's really disingenuous and insincere, especially when you're talking about those types of experiences. The best word that I can use to describe it is distasteful. And we've seen a lot of those scenarios in the psychedelic space where, like, okay, you don't really have a real path forward. And now you're like, chilling your own personal experiences to try to get us to buy stock. And your best case scenario here is that you can hold this thing long enough. Well, for you, your best case scenario is you're able to just blow out a bunch of paper into the retail investors' faces. But if you're trying to build a real business, your best path forward is to go find some sort of M&A that's out there so that you can and when we say backfill, what we mean is you're going to try to acquire companies that have real assets, and that generate cash flow, that generate revenue. You're going to put that on your income statement and your balance sheet, and you're going to do that by using the paper. In other words, using your company stock, which is terribly overvalued. It's these moments where, it's kind of soul crushing when you see a group of adults and they're all like, being polite or encouraging this sort of malinvestment where, like, somebody loses in the scenario. The operator who sells their business for cheap paper, the retail investor who's buying the paper as the cheap paper gets sold into, or the person who is trying to sell the deal that ultimately can't sell it, and they're ultimately the one who I think is most responsible for doing something that is repugnant. It's probably a good word. But it's just these moments that really make you sort of just kind of take a step back and go like, man, I want to find real companies. I want to cover those companies. I want to invest in those companies. I want to help those companies because there's such a small amount of them out there that, and it's soul crushing to cover stuff that sucks.
Oh, absolutely. Right. Like if anyone out there has a company where the value, now, I'm going to be very specific.
Get ready for the emails you're going to get after this rant, but go ahead.
That's okay. If anyone has a company out there where the business itself, I'm talking the operations, the revenues are ridiculous, or in the next, I'll say 2 months, so maybe 2.5, by the end of the second quarter of 2021, they're expected to get significant revenues. That bring them to us. I will gladly take those emails, those calls, and sit down with management and really get under the hood of those companies and dive in. That's what I enjoy investing in. Those companies where they're just simply undervalued. The equity does not match the operating business. If there's not an operating business and it's just the equity, why are you a public company?
It's snake oil.
Right? Like, Canada gets a bad name in a lot of senses because of these companies that go out there and they're just shells with nothing else. And, junior mining is one thing. And even junior mining gets a pass compared to some of these deals that we saw in the psychedelic space, we saw in the cannabis space. Look how many cannabis operators there were out there a year ago to today. And when I say cannabis operators, I'm talking about public companies, right? Like, they all just disappeared. Why? Because they were just chasing a license or whatever. At least with junior mining, you have a property. There's something physical you can point to and go, hey, we're proving this out. Now, is all junior mining fair and everything else? No, there's absolutely just as much garbage in there. But there's a reasonable path for a sizable portion, right? So, I mean, if there's a company out there that like Iguana is a great example of what I'm talking about. Iguana, I know that Justin's going to an office every single day. He's working day in, day out, endless hours. I'm sure of it.
And this is for 20 years in the making. And some could argue it actually in some way started out as one of those companies that we like to shit on.
And I mean, I get that. Not every company is going to have the best backstory, but 20 years, the operators change. What they're doing changes. There's pivots. I get that. Pivots are okay. People like to think that pivoting is the end of the world and that it's the worst thing in the world. No, sometimes an operator realizes, hey, this isn't the best avenue. Let's try going over here. Now, if you pivoted 3 times in the last 9 months, it's something entirely different. Let's be clear there.
A certain COVID company that went from being a blockchain token to being a cannabis company to being a Internet of Things company, to being an AI company, to being a COVID detection company. I'm not going to say who that was. That's kind of what you. Sorry for interrupting.
But that's what I'm getting at, right? Like, there are companies out there, right? I mean, some have come to us. Some are now clients. It happens. There's always mismatches out there, and that's what I'm after. That's what I want to dive deep into, and that's who I want to sit down and chat with. Right?
Here's the fun thing is, I want to tell you that if we just I'd rather make less money and cover real companies than make more money and cover fake companies. But I'm going to tell you something. In the long run, you will make way more money covering and investing in real companies that do real things than you will investing in. Now, look, I know it's a lot more fun. Nobody wants to sit and I was joking on the weekend. I was talking to Max Cherney over at Barron's, and I was telling him because he covers the chip space, and I was saying to him, concentrate 2 stocks, 2015 photon control went from like 10 cents to 40 cents, or sorry, I think today it's dollars, and then the other one was Expel Technologies, which is now like a $50-$60. I bought it at 2. And those are real companies, but you know what? I got bored and I sold them both. Photon, I made some money on Expel. I sold it at a loss. I'm like the only person to buy Expel and sell it at a loss. But the point that I'm getting at is I got bored, and these are real companies that generate real cash flow, that were growing businesses. And for some stupid reason, I got bored and I was like, oh, cannabis stocks. Yay.
You know what I think part of it is? I think the easiest thing for a lot of people, I'm not making investment advice here, guys, just being clear, have 2 accounts. I get the same way. I get bored, right? This should be going. Doesn't go. Screw it. I'm going over here. Then it goes. Happens all the time. All the time. Easiest method I've found personally is I've got 2 accounts. I've got my trading account and I've got my long-term hold account. And those are 2 very different theories that I'm operating under. And it works because you're not looking at this. You've got something that you can float around in the market with and play a bit with. Keeps you entertained a bit. And over here, you've got the ones that right now they're small growth companies, but I'm fully expecting that in 5 years, I'm going to be collecting dividends on them. And you know what? If I can get shares under $1 of something that I think is going to generate dividends in 5 to 10 years and have growth in the interim, to me, that's exactly what I'm in small cap for. Dividends are boring, I get it, but you know what? I'll take a monthly check when I can accumulate 500,000 to 1 million shares in something when it's super, super cheap and just wait, right?
I'd like to give it a shout out to JTD who commented. We don't get a lot of comments on social media. It says we got 127 people watching us right now. JTD, we see your comments, and I want to just let you know that we really do sincerely appreciate it. This morning, I don't really want to get too deep into the actual mechanics of names on the fly. It usually doesn't make for great radio, but we'll look into any of the names anybody wants us to. And if we think that we've got a strong enough grasp on it and interesting things to talk about, we're happy to do so. Jay, what's going on at the dive today? Anything interesting?
This afternoon we have Marshall Gunter. It's Gunter, right?
Yeah.
The T, not a TH. I mess it up all the time. Marshall Gunter of Data Metrics is on the Daily Dive. He goes over their recent telehealth news as well as their drone news.
There you go, JTD.
Actually, that's kind of funny.
He asked us about data metrics. So I'm guessing not liking data metrics. No, I actually. They're a client of ours.
Been unfortunate, I'll say that.
Yeah, but I think that if the SaaS numbers that they put out are accurate, which I don't know why they wouldn't be, based on those contracts, I think that from a valuation standpoint, make the case that it's an interesting company. The structure I think would scare a lot of people if I'm being perfectly frank, but I think that they're in a very interesting arena with social media analytics, and they've found a way to put a bunch of cash flow on the balance sheet via doing this COVID test kit stuff, getting into telehealth. So we'll see where it goes. But the interesting thing is this is not a company that's going to sit on its hands. They're certainly in it to create awareness on the stock, and they're in a lot of really hot areas. So we'll see. That's my polite way of saying there's a lot of risk here, but don't be surprised if they keep this thing going.
Absolutely. Outside of that, I don't know what I got going on this afternoon. There's going to be some macros, maybe some more stuff from Justin. Justin provided some coverage earlier today on Greenlane and Cushco, what Canaccord has to say about that. I guess you call it a merger because it's 50.1%, but yeah, we'll see what else goes out and what writers bring to us. Okay.
Well, look, Jay, I appreciate you hopping on here and co-hosting with me today, as you normally do. The only reason I bring that up is that I know that our man, young Justin's been stepping in occasionally. Can you hear that music?
Been doing great.
Can you hear that music?
Yeah, we can hear the music.
So, quick little disclaimer here. Nothing we talk about is intended to be financial advice. We are not licensed financial advisors. If you're looking for that sort of thing, go find somebody who is licensed. This is for informational and entertainment purposes only. We're going to be back at 2 p.m., guys, with the CEO of Gage. Just started training today. Big deal out of Michigan. So if you're around at 2, check it out. We got some big guests coming on later in the week, from Kai Hoffman to Mark Chandler to our special Friday guest that I can't wait to talk to, Craig Hemke.
Oh, Craig's back. That's great. That's great.
We're getting Craig back. Mr. Turd Ferguson, as he prefers to be called. So look, guys, you can spend your last hour staring at any screen, any place in the world, but you chose to spend it with us. I sincerely appreciate that. And hopefully we'll see you tomorrow at noon. Thanks, everybody.
It's so crucial, I gotta keep it. It's in the air.